I would say it's depending on the strategy you're going for. If you're a buy and hold investor, Germany is still a market to look at. Maybe possibly you have to look carefully what type of locations, what type of portfolios you're buying to. I think Ireland, Dublin, I've talked about Dublin for more than a year now, and I'm still believing in the Irish residential market as long as you stay to the Dublin area and have a good location there. That's very interesting. Denmark is an area, not only because we invested there, because there you saw a lot of stock coming to the market as you had developers gone bust, they rented out, and then suddenly, all of a sudden, a good quality rented stock started to exist again. Finland is a market, return-wise, quite interesting. The only problem is it's very small, very local. Only 2 international investors ever entered the Finnish residential market, so it's quite competitive. You be on the ground, but you can achieve incredible good returns given that you have a very liberal rent law. You can increase rents by 10% every year. That's not an issue as long as the market is moving that way. And if you have an under-rented property, you can really bring the rent roll up to market in 2-3 years' time, even if it's 25-30% under-rented. And on the other hand, if you go for more, let's say, value-add opportunistic strategies like buying and selling on to individuals, then even some areas in Spain, Madrid or Barcelona might be of interest again, because I think there is a residential stock that really makes it able to buy and then sell it on, as long as you're not going for the big holiday developments along the coast or some of the areas on the city fringes where these high-rise buildings have been built. That's nothing of interest, but that's a very small niche at the end. Making John's argument about France, yes, it's a market, it's there, it's existing, but the question is, where do you get the returns out of France? And that's what I've never figured out, never got the figures on that so far. You had an opportunity in France 3-4 years ago, but currently I would say, if you're return oriented and not do privatization, don't go for it. And the other thing is, what might be interesting in the medium term is what's going on in some CEE markets. You have government initiatives in Poland that try to set up a rental sector over there. There is now a government-sponsored entity listed on the Warsaw Stock Exchange that is trying to set up a larger rental portfolio. That might be something on the medium term for institutions to look at, because simply the overall housing shortage is happening across Europe in all the metropolitan areas where the people are migrating to. And you need some kind of affordable housing in all of these areas. And it will not be owner occupiers providing these kind of affordable housing. So a decent rental market is needed in most metropolitan areas. And therefore, as long as you stick to these areas, there are opportunities. The only question is, do you have an institutional framework from the legal side, from the liquidity side that really supports these kind of things?
I mean, I think if we just focus around central London, we've already referred to Crossrail and the impact of Crossrail. We can very happily send you that research because I think it's very interesting. I mean, prime central London will always be prime central London, there's no question about that. But I think some very interesting projects, particularly on the South Bank. And when I say the South Bank, what do I mean? Well, really from Battersea all the way back to Tower Bridge. I think it's very interesting. And again, a very strong argument for sort of Wapping heading east. So Wapping heading out into Canary Wharf and onto Greenwich. And then again, if you look at what's going to happen in the future in places like White City, sort of going out to Shepherd's Bush and that area. So I think you can make a very strong argument for all of those. The issue is trying to find the right product at that time. So without repeating myself, but I think the central London market will continue to be strong. We talked a lot about international buyers and international influences, but one of the pleas we have when we're talking to our clients is don't ignore the Brits. An interesting stat for us is that if you look at our applicant base out of our Covent Garden office, over £2 million, 54% of our buyers are British. So the Brits are back in a big way. So it's very important we don't forget that.